Hey traders, what I want to do in this video is I want to teach you how a technique of learning how to read the market and how to actually gauge what's happening in the market right now. So anyway, let me actually get straight into it now. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, so traders, in this video, I'm going to teach you a technique that I've actually discovered by accident. I haven't really been taught this, but I've discovered it by accident. Now, I'm a firm believer on the KISS principle. Keep it simple, stupid. Or keep it simple, silly. And so, what I want to do in this video is, I want to talk to you about some tools you can use to help you gauge what is happening with a movement or an action or what is actually happening on that chart. Now, as I said before, I'm a firm believer in keeping it simple. So I don't like to use a lot of moving averages or Bollinger Bands or a lot of indicators for that reason. And a lot of the times you'll see when I do my videos, this is all generally I have, a chart and volume. That's generally all I have. Now, I'm not saying that moving averages and stuff, like maybe one moving average could be okay, and I do like to use moving averages sometimes because it gives you a good gauge of where things are flowing. But on my overall day-to-day movement on my charts, I want to keep the chart as simple as possible. And sometimes you guys will see, sometimes you'll see this chart here, right? So if I bring up this chart, you can see this top chart up here. Sometimes I'll even just bring up this black open highlight, black and white candlestick chart, and I'll just squeeze it up, or it might be an open highlight close chart. But what I like to do is I like to keep it as simple as possible. That's actually an hourly S&P chart. So I like to keep things as simple as possible. The more simple my trading has, the more simple my trading has gotten over the years, the less stress, the more profits, and so on and so forth has been in my trading career. So just make sure you keep it that way, okay? So what I want to talk to you about in this video is about using the stochastics. Now, I used to use the stochastics a lot, and I still do believe in the stochastics. But don't use stochastics just by itself. But I want to talk to you about in this video here, there's a lot of different things you can use when it comes to using the stochastics and using the turning points and all that sort of stuff in the markets, okay? But what I want to talk to you guys about is I want to talk to you guys about using what I call synergy in all indices with stochastics. Now, what I mean by that is this. If we look at all the indices, right now we're looking at the S&P 500, but if we look at all the indices, one thing I have noticed is that when we start to get into a turning point in the markets, now there's a lot of things, as I said before, there's a lot of things I can talk to you guys about strength in moves, but there is something that I call synergy in the stochastics. Now, for example here, right, we had this sort of buying movement up here, but look how weak that was, right? We had this strong move down, this sort of a strong move down, then we had this weaker buying movement, up here, and look how fast the stochastics ran up through there, right? And then they started the turn through there. Now, I was up here, and some people saying, John, what was your research saying up here was getting ready to turn? Because I was calling around about this whole time here. Oh no, it was because I was actually looking at stochastics was one of them. I was looking at the stochastics here. I'm saying, okay, yes, we may get some more upside, but I'm looking for a turning point here. You go back to my other videos I've done. I was looking for a turning point, and what that was looking at a few things. One, that we actually just had such a weak buying movement up. There wasn't really a good buying movement out of that at all. So that was the first thing I was looking for, that we had a weak buying movement to the high side. Now, the thing that I was looking for, and again, this is about helping you read the charts, is by using stochastics. So I like to use this double stochastic. You don't really have to use the double stochastic, but I like to use the term 9 and 5. So if I go to my settings here, I like to use the term 9 and 5. Why 9 and 5? I don't know. It's just what one of my mentors used to use instead of the normal 14. And I like using that better. So what we're doing here, guys, is this: is we're looking at the stochastics, and then what I was saying before about synergy in the market. Let me take a drink here. Oh, the alkaline water. Nothing better than alkaline. That's probably about like a 9 pH on the alkaline scale. That gives you energy. So what we're talking about here is what I was saying before, and I was saying before that I was expecting a turning point here sometime soon. What I was looking at was this. I was like, okay, cool. The market's getting ready here, and the market right now is at this point through here, but we're getting the stochastics getting ready to turn. Okay, and when you follow the stochastics, a lot of the time the market will tell you when it's getting ready to turn. Now, sometimes it may not happen, like here, right? It gets here and it just gets pinned, and then we get a turning point. So that's where you need price action and stochastics. But just for now, let's just focus on the stochastics. So I saw where we are right now. We had a weak buying movement. That tells me we're likely to get some more selling movement. We did do that. The stochastics at the top there, and then I started looking at my other indices. Now remember I said before, synergy in the indices of the stochastics. Now look at this one here. Look at where the Dow Jones was. Look what the Dow Jones up here was getting ready to turn as well too. Look at the Russell. Russell was almost at the top and getting ready to turn, and it was actually starting to turn as well too. And also same with the Nasdaq. See, the Nasdaq was getting up to the 70 level as well too. Now they weren't all the way up through there, but they were getting up through there. So I was noticing all of the indices were synergistically working at the same level. And now when that happens, you have power. You really have power. And all the indices were making this weak buying movement, and then the stochastics getting up here and starting to turn and starting to turn down. So where we are right, so where that happens is we got a turning point. And that's where I see that. Now, especially when I start to look at the S&P 500 and the Dow Jones, I believe they lead the markets around. And I was looking at the S&P 500 saying this is up there. And especially the Dow Jones. The Dow Jones is the big daddy for me. I believe the Dow Jones, if the Dow Jones is really doing something, I believe all the other indices are going to follow. I think the Dow Jones is sort of like the leader in the indices. Not the leader, but the Dow Jones for me is the chart to really focus on to see what is actually happening, because obviously the other charts can make peaks and troughs and all that sort of stuff as well too, but I really like following the Dow Jones. So that's what I want to talk to you guys about in this video, is following the synergistically of the stochastics. So, but what's happening right now, obviously we had a public holiday, but what's happening right now is we're seeing at this point right here, and I put a video out just recently saying I think we're likely to start maybe getting a turning point soon. And what the reason why that was for was because, one, look at the stochastics here. We've got a turning point here. We're at the bottom here, and you can see the Dow Jones wasn't down there at the bottom as yet, but we're actually at the support level. We have the Russell. The Russell's down here as well too. Look where that is. That's getting ready to turn as well too. And look at the Nasdaq down the bottom as well too. So the only one that's not down there is the Dow Jones. So that's the one that sort of gives me a bit of a look. Oh, I'm not too quite sure, but by looking at these markets, guys, that's where I was saying, that's where I was getting my research was showing me, hey, we may spend a little bit of time running to the high side. I don't think it's going to be that much of a move to the high side. I think it's going to be like a little bit of run up, and then we start to really crack down. Now, if that does happen, let's go to the Dow Jones here for a minute. Okay, let's go to the Dow Jones here for a minute, and let's talk about what happens. So, looking at the market right now, if the market does run up a little bit here, and maybe a little bit here, and then starts to come down like that really heavily, and starts to break below these levels through here, then that is a definite weak sign, especially if we start to get some more lower peak action. See, look at this here, double top, or lower peak, came down, trough, peak. If we form another lower peak and then we break down out of this support level, oh my goodness, down we go. So if we do get that, we make it a little upside, and then we turn around really quickly. So this comes up like this here, and then suddenly just turns down like that really quickly, or starts to turn like that, should I say? And then we start to get a really, even if it's a small lower trough. Now the what I have found by looking at these charts, and I'll give you a bit of a bonus session here. If the market is making a support level here, and obviously we're starting to get some downward movement through here. If the market runs up and has like a little up bar through here, but then something comes straight back down like that, creating a really shallow, or a really more not shallow, but more of a deeper lower peak, where it doesn't have much of buying movement, and then comes up and comes down like that. You see what I'm doing? See what I'm saying there? So we have this peak here. When market runs down, it comes back up. It creates another lower peak through here, but it's a really shallow lower peak. A shallow or deep. What I'm trying to say there is this: is that if the market runs down 1, 2, 3, 4, and it runs back up, creates a high, you know, maybe the market's come down through here, and then the market comes back up through there, and the market comes down. You can see how that's more of an extended. You got the market run down, and it had like a 2, 3, 4, 5 up days, and then we created a lower peak. Or what happens sometimes, the market might run down, come up like that, and then head back down again. I've noticed this on a lot of the triangle ascending and descending patterns. When that happens, if we get like a little bit of an up move through here, just maybe even another up day, and then suddenly bam, we come down again, especially closing below that level, guys, I'm telling you, if that happens, then it's on like Donkey Kong. We are getting ready for some serious downward selling pressure, and I'm talking to at least, looking on my longer term time frame charts here. Let's bring up my weekly chart here. So if I bring that up here, and once again, let me bring my trend lines up, trend lines tool up here, trend line tools up here. Yeah, you can see where we are right now on this weekly chart. You can talk about these levels down here. So, you know, you're talking about like at least these levels down here. If this level gets broken on the monthly chart, as you can, on the weekly chart, as you can see, the next stop is down here. Now, how much of a drop is that? It's an almost 7% drop. And then probably another. I reckon it'll exceed that and continue going down, but because the acceleration move will probably likely continue. So, and you can see what's happening through there as well. So, I don't take too notice of the weekly stochastics, guys. If you guys are looking at the weekly stochastics, I don't take too notice of that. So, there we go, guys. I hope you've enjoyed this video. I gave you 2 little tips that you guys can use when trading. Firstly, look at synergy in the stochastics along with price action reading. Remember, price action first, mean the chart first, then use the stochastics along with that. And the second thing I taught you was looking at the peaks and troughs and understanding the market, that if we only get like a little bit of an upward move and then the sellers come in, that's showing very, very, very strength in the sellers. Buyers have no chance and we are likely to get hammered. And if that happens, and even looking on the indices, guys, use that on your actual, on your even when you're trading. You know, if you start to see, let me squeeze this chart up here so I can get a bit more room here. Go to the weekly chart. You know, guys, even if that happens on an ascending triangle pattern, you know, when the market goes sideways like that, and then the market's squeezing up, and the market's go like this. I've noticed this on this sort of pattern. I love trading this. When the market runs up, has like a little trough, and then breaks out like that. See that there? What do we have here? A high trough, a really, really shallow. It wasn't a deep high trough. We just came up a few down days and bam, and then had the breakout. This was the breakout here. Oh my goodness, those patterns there, bam, 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 really strong. Why? Because this is actually showing the buyers are really eager to get into this, and that was that high trough there, and that's the reason why I'm flipping on the head side to show you on that as well too. So anyway, guys, that's it for me. I hope you enjoyed this video. I'll see you next time. Hey, it's John Howell here, and thanks so much for watching my video. You see, I'm putting out daily videos and education on helping you learning the art of successful trading. So click on the subscribe button to keep up to date with every video I do. Also, check out my story video, $250,000 in debt, cancer, overweight, family passing away, lived on the streets, and more, and how I overcome it and now thriving through my life. This is here to motivate you, so click on that image to watch my video. And lastly, if you're struggling with your trading, then you need to see my latest webinar where I'm sharing with you an amazing strategy that allows you to generate an income without getting the direction right. So click on that image on this page to register for my next free webinar. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.